All right, welcome back to Getting Past the Premium, everybody. I'm very excited for this conversation today. I have with me somebody probably everybody already knows, Carey, but I'm excited to bring you to our audience on Getting Past the Premium. But I have with me Carey Wallace from AgencyFocus. You're actually at home this week. That's awesome. I'm glad
I
to hear
know, it's crazy, right?
that. So everybody probably has, seen your conferences. I know you do a lot of speaking at and do a lot of work bringing some of these conversations as to how agencies can grow, what they should be thinking about, how they should be growing. But let's start with your background a little bit. How did you get to, where you're at with Agency Focus in the industry? What's your experience been? And then we'll kind of jump into what you're doing today.
Sure thing. Well, thank you so much for having me on. I appreciate the invitation
Yeah.
and I look forward to this conversation. So, my background, I started in the industry about 16 years ago. Kind of like everybody else, I kind of fell into insurance. It
Yeah.
wasn't necessarily what I thought my career was going to be, but I actually started in a tech startup of all places
Oh,
first.
I didn't know
I
that.
took a little bit of a break and I raised my girls. And then when I was coming back, I say it's like my second career. Insurance found me. I was recruited in Ohio at the Ohio PIA, and they were merging Big I and PIA at the time. And I had some M&A background. So they recruited me to come in and join their finance team. Thought it was going to be a project, ended up meeting some incredible agents that are still my friends to this day. And I say they are the reason that I stayed in this industry. But once that merger was done, they basically said, what is our value proposition as an association? And it was helping agents buy and sell each other with the data they need to make strong decisions,
Mhm.
and also leveraging the data that was inside that association to help agents learn from each
Yeah.
other. So I led those initiatives and eventually started my own business 3 years ago, which is Agency Focus. So at Agency Focus, we are focused on helping agents understand their value, really make strong business decisions, whether they're acquiring, whether they're growing, hiring people. And then we actually provide fractional CFO services to help agents that maybe don't have a financial person inside their agency, to help them build their business.
Yeah. Well, that's
Yeah.
awesome. And I know that, you're working with agents and agencies in a lot of different facets around their
Yep.
business. But I know one of the things that we were talking about before we jumped on is just key metrics and how we should be thinking about our business, right? One of the topics we were talking about was premium versus revenue, right? But I know it goes beyond just those two things and whatnot. So maybe like give a perspective on when you're engaging with maybe even a new client. What are you going in and evaluating as far as
Sure.
understanding that business, where they're at today, and then what you can help them improve upon moving forward?
Yeah. So one of the first things that I talk about, when someone calls me, one of the first things I need is to get a perspective of where are they? Like,
Mhm.
what's the size of their business and what are they trying to build? So
Mhm.
typically, I'll get a perspective of their size and revenue. But most people, if I just pose the question, what is the size of your business? Oftentimes I will be told premium.
Yeah.
And, that was our earlier conversation. I love it when someone leads with revenue because that means they're thinking like a business owner. Um, Premium's important. Don't get me wrong. It's important with your carrier conversations. It's important to your producers. It's important. But as a business owner, if you know your revenue and you know how you're allocating your resources, what percentage of your revenue goes to pay your people, or what percentage of your revenue goes to technology, or what percentage then you know what your profitability is. So first and foremost, agents should know, what is my revenue size, what is my split of business, and what is my profitability or EBITDA.
Hmm.
What is that cash flow of the agency, that profit, and am I in a, in the benchmark or outside the benchmark? And if you're not in the benchmark, why? And how do we get you in the benchmark? Does that make sense?
Yeah, totally. 100%. One piece of clarification when you say there's split of business, what do you mean there? Or elaborate on that?
So, you know, heavy commercial lines agency is different than a heavy personal lines
Yeah.
agency, or one that's very heavily focused in a niche. So all of those things will actually help you know what kind of percentage of profitability you should have, or what my performance should be. So I need to know the overall makeup of an agency to know what metrics to apply to it, to say, am I operating efficiently or am I not operating efficiently? So
Yeah.
I typically ask, what is your total revenue? What is your mix of business? How heavy are you personal lines, commercial lines, benefits, other, what does that look like?
Yep.
And then what is your profitability? And then we go all over the place with things based on knowing those things.
Yeah.
Yeah.
Well, that's what I figured. I wanted to just make sure we understood that, because I agree with you. I mean, it also depends on taking that further. We were talking, what's your percentage of excess surplus lines? What are you doing in
Mhm.
bonding? And sometimes it seems like in our industry, and I say this all the time, it's a blessing and a curse, right? Everybody has to buy insurance, right? And
Yep.
so that's a good thing from the standpoint of we have a lot of prospects, but it can also be a bad thing in that we can sell any product to anybody, right? And that doesn't always mean that we're being thoughtful and smart about it as far as building our business. When you're just starting out, I think you kind of have to do that, right? Like you
Sure.
have to get revenue coming in, but as quickly as you can, having a plan as to what you want to do with the business, where you want to get it, is important to dictate those decisions, right? And so I'd be curious then your perspective on that piece of it. Like, what conversations are you having, or how are you getting in there and helping business owners determine that, right? Because say somebody's starting out as just a producer, they started their own shop, they're just growing it. At some point they've got to decide, I want to make a business out of it. So how do you help them make that transition, I guess is what I'm asking.
Absolutely. So there's lots of ways to go with that question, but I would tell you that a lot of people come and they'll say, I have grown my agency to this point and I'm not sure what to do next. So they'll say, I don't know if I should hire. I
Hmm.
don't know if I need tech, but I've hit a plateau and I'm not sure how to get to the next level.
Yep.
Right.
Yep.
And that's when you start making the decision of, okay, if I specialize a little bit, the tech becomes clear what makes sense inside my agency to become efficient. If I'm a generalist and I write anything that comes my way, it's harder to choose where to invest in um, those kind of resources. How should I market? What tech should I use? What hire is the best hire?
Yeah.
If you become a little more specialized and you separate sales and service, now you can start really looking at the efficiency. When you first start out, everybody wears all the hats. At some point, you can't grow anymore when you're wearing all the hats. Even if you're mixing sales and service, it becomes really difficult for that person to actually be hitting the benchmarks for what a producer should generate, or what a or what a service person should be managing. So getting some clarification on roles and clarification on what's the most profitable customer for me, and
Mm,
maybe I should focus my effort there and think about building the infrastructure that supports that, not everything. That's what's super key, right? And it
yeah.
depends on a lot of things. It could mean what are the most, easy to work with carriers? What are the things that we're most passionate about? And the people on my team, that they came from, you know the construction industry, therefore they have all these contacts in construction, that's where they should focus. But getting that focus allows you to start making strategic decisions about the business and how you build that infrastructure.
Yeah. Well, and that's, the niching down and all that stuff is definitely, I don't want to say a hot topic right now, but there's a lot of people talking about it. I mean, I agree
Sure.
with it. I think though the value in it goes a lot deeper than people talk about, right? It's usually talked about from a sales perspective. You can sell more if you're niched, which, again, I don't disagree with. But to your point, the sooner you're getting thoughtful about that, the benefits um, trickle down throughout the business
Mhm.
further than you would think. And when you say niche too, it doesn't have to be I'm only going to work with plumbing contractors of this size. It can be broader than that, but just understanding you can't be everything to everybody. And so who are you going to be something for, right? And what is that
Mhm.
something going to be? Because that dictates, technology you might need, expertise you've got to go get, contacts you're going to make. And all of those things become easier. Those decisions become easier the more laser focused you can make that client, right? So, how do you help somebody work through that process? Because again, this is something that like we've dealt with internally over the years of, well, what happens if I get this opportunity? What am I going to do? Like somebody calls me and it's outside of my niche. What do I do? I got to tell them no, like no. And it's that whole thing of people being scared about, is there enough of those? Can I get enough? And what do I do with business? That's just, I always laugh because it's like, well, how much of that business do you have just calling you out of the blue today? You know, and it's usually not much,
Exactly.
but
Yeah.
anyways,
Yeah.
how do you approach that with your clients?
Yeah. So, when someone comes to me, they want to know what's the value of my business and how do I maximize the value of my business. So that's the perspective I'm coming from. And typically, when we do the analysis, we look at the P&L for the financials. That
Mhm.
gives me growth, profitability, that allocation of resources. But then I switch to what are the risk factors inside your agency? How concentrated you are with your carriers, how concentrated you are in any one line of business, how concentrated you are with producers, the mix of like how do you handle sales and service inside your agency, and is it split, what those comp structures are. So my point is, when I do that analysis, it kind of jumps off the page at me to say, hey, listen, you're growing the fastest with these carriers. They are your leads. What is their appetite, and what could you best position yourself to build that second, third, and fourth carrier in your agency so you're not so heavily weighted with one carrier? Or
Mm,
it might be you have one producer that's super passionate about this. What about these other two producers? What could they do in order to have the book of business not be lopsided with one person or another? So it's not the same strategy for everyone, is what I'm trying to say. And it's not an absolute stop doing everything else and
yeah.
only do this. It's a matter of how can we maximize what we have and also not put so much in one basket that when you hit a hard market or someone who's not writing a new business anymore, all of a sudden you're not so heavily swayed in one area and you're scrambling in order to deal with that. So honestly, it kind of jumps off the page when you look at what they're doing. And sometimes, going through the process, they're realizing it themselves as
Yeah.
well. Like, hey, we have a little bit here, here, and here, and we're really, really good at it. And we actually have three carriers that like that risk. Maybe we should market ourselves as being the people to go to for, one is veterinarians. Another agency that I work with is all gyms. Like, they're really good at it. They have the right markets for it. They've got three markets for it versus one. Absolutely build that. Why wouldn't you
Yeah.
do that? Does that make yeah.
Oh,
So
totally.
it's not a one size fits all. That's the beauty of this industry.
I
Nothing is
agree.
one size fits all. It just is kind of, you have to look at it and then take a step back and say, oh, I could actually get really strategic about this and not have myself pigeonholed in one place or no area of focus at all, which could be a problem, right?
Yeah. Yeah, and you probably see this much more than I do. I see it, in conversations that I have, but it is the beauty of our industry, right? We all sell essentially the same products and solutions, but there are so many different ways that you can go about doing it, in creative ways that I've seen people doing it. And
Yeah.
then the ability for somebody to start from scratch, is definitely not easy. But I
Right.
think with some of the services and networks and, there's pros and cons obviously out there, but it is easiest, or it is as easy as it's ever been probably to get up and running and be successful. And that's, I've seen some small firms, even one person shops that are doing some really cool, unique, creative things, because they've been thoughtful and been strategic with how they want to build that business. But it's encouraging, right? Because I think the more of those folks we can get into the industry to kind of keep things innovating and progressing and moving forward, it's only going to make us all better. So
Heck
uh,
yeah, I agree with that. 1,000%.
yeah, and it's fun. It's fun to see how other people are using tech or doing marketing or, all those little things. But which kind of brings me to, I think, my next question that I I was at saw you present, and I'm gonna forget what conference it was last year, but you were talking about how the metrics are kind of shifting a little bit in certain high best practice firms that you're working with, right, in your network. Um, and I know that again, it's different, could be different for each firm and what you're tracking, but I'd be curious to see the trends that you're kind of seeing. You know, when you do break down your financials and you say, okay, there's certain buckets of allocation, right, for dollars.
Mhm.
Whereas for years it might be, you know, technology was 2% of our budget or whatever. You know, is that trending to 5% now? Or like, what are you seeing in those trends from a financial perspective that kind of tell you, you know, can tell you the strategy and can tell you what firms are investing in, right?
Yep. So I love when people ask me this question. So I'm going to give a big asterisk at the beginning to say the percentages are not across the board. It depends on what your size is and what you're building. So if we're talking about a startup agency, their percentages are going to be completely different than someone that's at 500,000, 750,000, a million. Well, you know what I mean? Like
Yep,
the
totally.
percentages become much smaller because you are investing in the infrastructure. So there's that asterisk.
Mhm.
But what I love is best practices has monitored how much the top performing agencies allocate to key areas for years. What's really cool is we are adopting tech and things like virtual assistants, AI, marketing in a very different way today than we were 10 years ago, 8 years ago, even 5 years ago.
Yep.
So I get the really cool opportunity to benchmark a lot of agencies or groups of agencies to show how does growth look or how does profitability look for those agencies that are leveraging VAs, or um, how does those same metrics look for those that are really heavily investing in tech and predictive tech, which is kind of cool. So I was on a podcast once and they were like, okay, we're going to do a quick round. Tell me the percentage that every agency should put towards payroll. What should they put towards tech? What should they put towards whatever? And the answer is if you are a growing agency and you are profitable, if those two numbers are there, how you allocate in the middle could look very different.
Yeah.
And here's what I mean. So a commercial heavy agency might only put 39% towards payroll because they've got tech doing a lot of the work, or they might have a VA and outsource services. So their payroll's less, their tech and their marketing is off the charts, but their profitability is also off the charts because they're at double digit growth and they've maintained it for a long time. So it's the combination of the metrics, not necessarily pick out one and say, well, am I super heavy in marketing? If you're growing double digits, high double digits, and you're heavy in marketing, keep doing what you're doing because it's driving growth.
Yeah.
If you're conversely, if you are flat or declining and you're 3 times the benchmark in tech and marketing, I'd ask myself why.
Mhm.
Like, those investments are not working for you. So we got to figure that out. So it's not one number is right or wrong. And I love that we're redefining the benchmarks because it's not the way it looked 10 years ago.
Yeah.
What's even cooler is the smaller scratch agencies are the ones redefining it
Wow.
because they don't come with the baggage to change. They're like, man, I'm going to invest in the infrastructure. I'm going to go really heavy and hard, and then I'm going to be well positioned to drive growth, and not referral growth. I mean, like real growth that can sustain itself over and over and over again, which is kind of cool.
That is cool. Yeah. And I agree with it. And the other, I mean, the important, I guess, area to start there, you mentioned it earlier, but it's where are you going, defining that first. You know, some folks
Mhm.
want to grow, some folks want to, you know, sustain what they have, some folks want to, it's just dependent upon your goals first off, right? Which I think we agree upon.
Sure.
Um, but what I think is it's been interesting to see change, you know, because 10 years ago, it was pretty, I mean, the best practices and the metrics were probably pretty standard, right? Across
Yeah.
the firm. And a lot of folks to grow it was hire the next producer and we pay, 30% to the producer on their renewal book and this amount for new business. And that's how we're going to go grow. Now there's, not that there wasn't back then, but there's a lot more focus on, well, can we bring in more marketing resources to support those producers so that we don't necessarily have to rely on hiring the next producer to grow, right? We can, but now your 30% that you were paying those producers might go to 25 because you're
That's right.
investing those dollars, or it should, right? Because you're giving them more resources than they would have somewhere else. And so I think it's hard for agencies as they grow to make some of those changes, which you need to. Like when you're just starting out, you're starting to hire your first salespeople, you might have to pay them more because you don't have the underlying resources available. Maybe you don't have a broad swath of carrier contracts. You don't have a marketing person. You don't have, so you pay them more because they're going to be doing more of the things or whatever. But as you grow, you got to be cognizant that you just don't continue those things when you do hire the marketing person or you do bring on the tech that allows them to make their job easier or whatever. And that just eats up profitability, making your, business less valuable,
Mhm.
versus having that idea of this is how we're going to grow now. And we're going to have to shift those dollars around to make sure we can still hit our numbers. Right. Um, and I'm just
So,
curious your perspective on that. Yeah.
oh boy,
Yeah.
yes. So I get to see. I love scratch agencies. Honestly, they're scrappy. They're the future. They're fun to work with. Like I truly enjoy watching people build something. I
Yeah.
told you my background was in a startup and I was the number 9 employee and we went to 47 and took it public. Like
Yeah.
I
That's cool.
love the birth of a business. So um, one of the challenges, though, is what you said. When you hire a producer and you're a scratch agency, you have to pay them more because they're building a book. They're starting from the square one. But if you do not step down that comp to match what industry average is at some point, you will hurt yourself in your ability to grow, and you'll also hurt the value of the agency because if a buyer comes in, they will not want to maintain and a comp structure that doesn't make sense and it won't be transferable.
Yep.
And so the things
That's a great
that
point.
drive the value of your agency is it growing? Is it profitable? And is it transferable? If all three of those things are not true, your agency is going to be devalued. So what I mean by that is some crazy comp structures are I'm going to pay 70 new or I'm going to pay whatever. That's not sustainable in any situation forever. It has to step down. And I love getting in early where I can help someone. Let's give a base that then steps down and puts them at the right comp structure from the beginning rather than putting a crazy percentage out there that you can't maintain and it's tough to back away from. Does that
Yeah.
so I love that you said that because same thing, if you're going to add service, if these people are selling and servicing, wearing all the hats, and then you add service to it, they should agree that part of their retention is now going to go to pay for the service people. That's just it's literally math. So
Yeah.
you have to be willing to redefine what that is as you have growth in an agency or you stall growth. And that's the reason why 83% of independent insurance agents are under 1.25 million, with 50% of them under 500,000 in revenue. They can't get beyond that because their structure prevents them from doing it.
Yeah. Yeah. Those are crazy statistics too.
Isn't that crazy? It's the
Yeah.
truth, though. It's
I know.
crazy.
Out of
Yeah.
30,000 though, it's, yeah, well, that's what you don't realize too. I mean, even the top 100, while they're big, it gets down to, like a $15 million revenue firm, which, is 617 or something, I think is like, it's good sized business, but it's not the locked into the world that you think about,
Right.
when you think top
Right.
100, and it just shows you the spread in our industry, which is again the beauty of the insurance industry. Um, I This may be a question that would be difficult to answer without the specifics of like the your client, but do you have kind of a process that you would walk through with them to understand what those metrics for them would be, right? So, like one of the things I think about is there's regardless of what your revenue is, there's 100% that you can allocate to different things, right? So if you're
Yep.
trying to find a 15% margin, do you start there and say, okay, now we have 85% to allocate to all the other expenses that we need to to do or to spend. And then how do you kind of work through that, if that makes sense? Do you have a,
Yeah,
yeah, do you have a process you go through or?
I do. I do. So, you know, anybody who runs a business knows that there are discretionary expenses that run through businesses, right? Like that's not a secret and that's okay. So I think my process is here's where you are today. I take their profit and loss statement, I put them in the benchmark categories that are in our industry, and I compare them to the benchmark. If you're under 1.25 million, like Marshberry, Reagan, their benchmarks are 0 to 1.25 million. At AgencyFocus, we actually have benchmarks for a $250,000 agency, a $500,000 agency, a 700, because we've focused on the smaller agencies by design. Certainly when I started out, my focus was 2 million and below because it was an underserved market. So we've built those benchmarks for agencies that are growing.
Mhm.
So my process is put their P&L, put what the benchmark is where they are, talk to them and get rid of the discretionary expenses or one-time expenses that might be in that P&L to right size it and come up with your pro forma, meaning what is the expected ongoing expenses in each of these categories? And then the question is, are you getting a return? Like, have you looked at it and is it working for you? Because if you're way above the benchmark and your performance doesn't match it, then we start asking questions. But typically, I just give them back their own data, showing them the percentages compared to the benchmarks. And then we have a conversation, because who am I to say it's too much in marketing? If it's driving the performance, then that's fantastic. But if you're over, if you're over investing in your space, in your occupancy, that's an area that you're never going to get a return for. You just aren't, unless you've got a ton of foot traffic, which again is not really transferable. Like those
Not
kinds, you know what I'm
anymore.
saying? Like there
Yeah.
depends on where you are over investing or under investing, how much we dig into those things. And it becomes a pretty enlightening thing. So one of the questions a lot of agency owners will say is, I can't hire. Well, when you clean up their P&L and you take discretionary expenses out, it becomes really easy to find the ability to hire. And it's just a matter of, do you want to decide to reallocate those resources or not? You know what I mean? So
Yeah.
it really is that's my process. And I show them and then walk them through, how do we get you either outperforming the benchmarks or at least moving towards those benchmarks?
Yeah. Totally. And so then speaking of that piece where you're talking about, okay, now we might be at a plateau. We're going to think about hiring. We're going to figure that out. I think it was Brett Young who was on, and it might've been a conversation him and I were having, but he talked about, your businesses go through seasons, right? And you might have a
Mhm.
season where you're building and you're reinvesting and, things are tight and you're not taking out the money, you're getting paid the salary or whatever that you want as the owner. But you're reinvesting, and then there's going to be a period where that reinvestment pays off and you start to get profitable and you're pulling cash out, and then you're at, okay, maintain mode, and then you're like, okay, we've hit this next pot. So how do you, well, first of all, would you agree with that? How do you look at that in a business? Um, and then how do you kind of help your clients work through that? Because I know that it goes beyond just the numbers at that point, right? A lot of times it's like psychological, and
Yep.
being able to take that step back as the business owner and say, how do I get to my next level in
Yeah.
achieving my goals?
So it is a stair step. I 100%, I think it was Brett Young that said it. He's 100% on the money. It is not a straight line like
Yeah,
this where
we all think it
your
would be.
your
Yeah.
profitability goes up. It's like this. I invest and then my profit comes. I invest and then my
Mhm.
profit. So if someone says, I probably want to exit in the next 3 years, now our focus is, how do we get our financials as tight and clean as possible to maximize profitability, maintain performance, or exceed performance, because growth, profitability, and transferability are what's going to drive
Yeah.
that value, right? So I would not be recommending do a whole bunch of radical things and try something. I would be recommending what is really essential, and do you have high performing staff? If you don't have high performing staff, now is the time to actually make those transitions that you've been putting off. Don't leave that for
Mhm.
the next owner, because all you're doing is giving them an expense and profitability that they're not going to pay you for.
Yeah.
So
Yeah.
if you don't make hard decisions and they buy your agency the way that it is today, and they choose to make those hard staffing decisions and you don't, that drop to the bottom line and they get the benefit, not you. So that's the conversation with someone who's ready to transition in the next couple of years. Someone who's trying to scale and grow, you have to dig deeper and say, what's keeping you from it? Is it your process? Is it your infrastructure? Is it because you're trying to do too many things and you're not focused on your ideal client? Like, what is causing that? And that will then, the money will follow that, if that makes sense.
Yeah.
So you really got to get to what's been your strategy so far. How do we redefine that strategy so you can figure out what tech makes sense for you? Because let's be real, there's a million tech decisions in this industry and they're not right for everyone.
And
Like,
they all look
you
shiny
know,
and they all look good. Yeah.
they do, and they all sound fantastic. But if you're a personal lines heavy agency, I mean, there's some tech that just doesn't make sense for
Yeah.
you. There's other tech that makes perfect sense for you, but you should not be even talking about the other things that every other agency might be talking about, but it
Yeah.
doesn't apply to you if that's not your focus. So I, that's really it. And scaling back some of those things that maybe you implemented and you're not utilizing is also part of this. I'm not a proponent of have a ton of tech. I'm a proponent of have the tech that you're willing to use.
Yeah.
So,
Totally.
and I love tech, don't get me wrong, but if you're not using it, it's an expense item. It is not an investment.
Yeah.
Yeah.
Oh,
So
100% agree. I mean, we could have a whole conversation on how to approach tech. I mean, you need to have a thoughtful process that you're going
yeah,
through.
what
Otherwise,
problem are you solving and how are
yeah.
you going to measure the success of it? And if you can't answer those two things, do not implement it because your people will be confused and they will not utilize it. So,
Oh yeah. Well,
right.
the impact is wide. People, clients,
Yeah,
all of those
exactly.
things. Yeah, and I think so going back to the goal of the agency owner too, like if you mentioned or you talked about if your goal is to sell in 3 years, um the thing that I don't think people also keep in mind is every decision you make to save money or to get yourself in that position is not a one for one decision, right? It's not saving a dollar, it's saving a dollar times a multiple, right? Which
Yes.
in our industry can be very large. You could be talking about
Mhm.
$1 equals 10 if
Yep.
it's profitability. And so I think understanding your goal as an agency owner is key in that because again, if your goal is to sell, that's a much different conversation than if your goal is to build, a business that's going to get you distributions that you can use to fund your lifestyle.
That's right.
Much different conversations, right?
That's right.
Excuse me. But I think that's something we got to keep in mind because sometimes those things can be difficult to do, but if you don't do them, you are giving up more than, just sacrificing on those dollars in the short term. Um,
Without question. And it's funny. You mentioned multiples. Everybody loves to talk about multiples. Nobody's talking about the thing that they can control, which is profit.
yep.
So if you think about it, the equation is your profitability, which is call it your operating profitability or your EBITDA, times a multiple is the value of your agency. Everybody focuses on the times a multiple. The reality is if you can maximize the operating profit, you you can far exceed someone else that might have gotten a higher multiple but hasn't managed their profitability. Like that's the reality. And I'd love, so you asked me what metrics should you know? You should know your growth rate, you should know your retention rate, and you should know your operating profit. You control that. That's 100% the business owner's decision. And that is a number that if you can focus on it and maximize it, you're going to position yourself well, period.
Yeah.
Internal, external doesn't matter. You're going to have many decisions and options for your agency. And nobody talks about it. Like
Uh,
the average agency cannot tell me their profitability. That's not a number they know off the top of their head.
yeah. That's
I mean, I
interesting.
have a hat that says EBITDA
Yeah.
on purpose.
Yeah.
So people are like, what is that? I'm like,
Yeah.
oh, you should definitely know what that is.
Yes,
Please know
you
what
should.
that is. Yeah.
Yeah, please do me a favor. Well, and but I 100% agree with you. And multiples get talked about all the time, but it's a self fulfilling prophecy too, right? Because typically, if you're making the right decisions to drive a higher profitability margin or the appropriate profitability margin,
Yep.
it is typically going to equate to higher multiples. So
Yeah.
it's not, again, it impacts you in more than just one way. If you're looking to go sell, or just if you're looking at the value of your firm, um, because the transferability, I think, is underlooked too in the three metrics that you mentioned there. A buyer is going to want to see the ability to take that business into our business and, as smoothly as I can, get a return on
That's
that
right.
investment, right? But if I have to
That's
make a
right.
bunch of changes, if I have to, switch this, change that, it is going to cost me more money in order to do that. So I'm not going to pay as much for it. Um,
Right.
Using the iPad on a beach, test where it's, the more you can run your business from an iPad on a beach, the better, right? If
Right.
you're going to sell, because that means somebody else could do that. Um, and so I always think about that when, we talk about folks that want to go sell, like those are the things you should be thinking about for sure. But then maybe flip that, somebody that's not looking to sell,
Yep.
you know, how are you helping them make the appropriate decisions as far as, reinvestment versus, profit at the end of the day? Because a lot of those reinvestments come out of profit, right?
Sure. Well, and you mentioned it earlier. The old model is you
Mhm.
grow to a point where you can't have, they're maxed out on the new business they can have, and you add a producer, or your producer produces so much and then you add another service person. And it's a formulaic thing. You just add more human resources to it. That's not necessarily the formula that everyone's utilizing.
Mhm.
So, what if you reimagine and say, for my service people, I'm going to take a body of work that can be done by a lower cost, either RPA, repetitive, we can automate it, or we can use a virtual assistant, or we can do whatever to create capacity in my already developed team. That's a far more impactful decision than adding another person every single time you hit a benchmark. I believe identifying those opportunities is what will separate those that can create agencies that are high performing, high profitability, and highly transferable than those that are average,
Yeah.
or, you know, it's really creating this divide. So identifying those opportunities, whether it's through technology, whether it's through virtual assistants, whether it's through, um, the other part is where your new business comes from matters. If the new business is all because everybody loves Elliot and they're doing business
Mhm.
with Elliot, guess what happens to transferability when Elliot sells?
Yeah.
Like, it has to be generated by something that will transition to someone else very easily. If you're generating it because of blog articles and because of leads that are online that you've generated based on the information you're putting out there, and that is not human relationship centric, that's going to be far more transferable than an agency that's really, I've lived in this city for 30 years. Everybody knows me. I'm on every board. Well, that's great until you're not there anymore,
Yep.
right?
Yeah.
So I think it's
Totally.
about identifying the weak points and shoring those up as much as you can, and providing alternative options that will maximize performance and also maximize profitability. And identifying those are hard. That's why I get to have a perspective of a lot of different people and how they're doing this. And
Yeah.
I can hopefully provide a different perspective than that agency might be thinking about inside their own business.
Yeah. No,
Yeah.
totally. It's the value of hiring a coach, I mean, everybody, that's how I would, articulate, what you do, I think, is, you're helping coach
Yeah.
those agency owners into, driving the best asset and business they can.
Yeah.
Um, but yeah, I think that's all spot on. I think thinking about it, again, it all goes back to your goals, but how can you scale? I think
Mm-hmm.
is a great lens to look at it. If you're growing through hiring people, that is not a very scalable model. It's difficult to find good people, and you're going to get to a point where, now let me take a step back. Caveat: people are your most important resource, 100%.
100%. Most
That's
valuable.
not what I'm saying.
Absolutely. Yeah.
But what I'm saying is building your model completely on the back of producers, let's say, or whatnot. So in order to grow, I have to hire the next one, like you're saying, is not a very scalable model, at least not quickly, because it's something you're going to miss on some, and it's going to be
Right.
difficult to find the next one. And so the more you can systematize the underlying process such that good people can come in and implement that process, the better off you're going to be, right? Because you're not reinventing the wheel, and I don't have to go find the next Carey to go out and, okay, Carey, go do your thing and go grow.
Right.
It's I can hire Carey and she can come in and implement my process that I know works, right?
That's right.
That is transferable. That is scalable.
That's right.
So I know we're kind of coming up on time here, but I wanted you to hit on a little bit. I think folks either starting from scratch or that are smaller agencies, a lot of times don't feel like they have the resources to invest in somebody like you, which might be the
Mm.
most important thing they could do, because getting that outside perspective. Um, I always think about it as you should, if you want to grow and you want to get to the next level, talk to people that are a level or two ahead of you, right? Or a coach
Mhm.
that has seen people a level or two ahead of you. And so talk through that a little bit. There's obviously you have clients that range from scratch to, $2 million firms. But I think a lot of folks think that it's going to be so expensive. I can't afford it. How would I hire Carey? I don't know what, the value would be. Talk through that a little bit, because I think that's an important piece that I want to make sure listeners get.
Yeah, my purpose of getting into consulting in the first place was to make our services as accessible as possible. So, for instance, and I have no problem saying what my prices are for certain things either, but we have several different levels of what we do. So, to value an agency, if it's under 2 million and it's over 500,000 in revenue, it's $3,500 to get a valuation. There, your agency gets benchmarked. We highlight all of the risk factors, and you really get insights of ideas of what you could do to get to the next level. We also benchmark agencies that aren't ready for evaluation, and we provide key benchmarking to give you just an idea of where we are. We do that on an hourly basis. It typically takes anywhere from 4 to 6 hours to benchmark an agency. So my point is there's lots of different ways to engage with us.
Yeah.
I have fractional CFO clients that are 3 years in the business, and they just want someone watching their business from a financial perspective to be able to bounce ideas off of and not feel so out on an island by themselves. Like, that's the biggest thing I hear is, as an agency owner, you're making all these decisions, and perspective would be super helpful. So
Yeah.
for that, it's a quarterly engagement, and it's actually $3,000 a quarter in order for us to review and help you reach your goals and make a lot of decisions. So that's our pricing structure. And we try our hardest to make it as accessible as it possibly can be.
Well, that's awesome. Well, and I
Yeah.
I figured that. I wanted to make sure you had a chance to lay that out to
Yeah.
everybody, because it's not as inaccessible as people might think, or for lack of a
Right.
better term. I think we inflate some of these things in our mind sometimes, and I want people to know that, especially if you're sitting on the island, doing things by yourself, there you can get a lot of help for very reasonable investments,
Yeah.
and that's how I would talk about, what you do for people is it's an investment. It's an investment in you and your business and getting you
Yep.
to that next level. So
Yep.
if somebody wants to reach out, how do they get a hold of you to, talk about what that could look like?
Well, I'm all over LinkedIn. You probably know that, but you can go to our website, which is agency-focus.com, or Carey at agency-focus.com. And I can find me on pretty much every social uh, platform there is out there, So absolutely, we are easy to find.
That's awesome. That's awesome. Well, anything that we didn't talk about that you think is relevant to folks out there that might be listening?
I think we got pretty
We
deep in
co-
it. I'm
we
pretty
covered a lot
excited
of
about
ground.
this. Yeah, I love it. That was awesome. So, if
Yeah.
anyone has any questions beyond that, I'm an open book. I will tell you, I do 30-minute calls with agents all the time, and that's free. Like, I'm happy to dig in and talk with agents. I love meeting new people, and this industry has been very, very good to me. So, yeah, that's the only
Awesome.
thing I would add.
Yeah. That's great. Well, I would encourage everybody to take advantage of that, because
Yeah.
it'd be very helpful. So, well, thank you so much. I appreciate it. And I hope everybody took a lot from this episode, and we will see you next week.
Yeah. Thanks for having me on.